Good morning. Welcome to Stock Market Today for Friday, July 24th, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email. Get a lot of the content for this show, give you daily stock ideas to consider. Hits your inbox every trading day before the market opens. So U.S. equities were lower on Thursday with the S&P 500 breaking a 4-day streak of gains. The growth sectors and themes remained under pressure. Staples, financials, and utilities outperformed. Treasuries were mostly stronger, with the back end of the curve leading. The dollar was weaker on the major crosses. Gold was up 1.3%. WTI crude down 2%. Initial claims ticked higher for the first time since April, sparking thoughts that the economic recovery may be losing momentum. At the same time, U.S.-China relations have begun to simmer once again. It's Friday morning. As we get to the desk, futures are down 20 basis points, well off the worst levels of the morning after Asian markets were weaker overnight, with China down nearly 4%. Japan remained closed for a holiday. European markets are under pressure as well. Treasuries are weaker, with more curve flattening. The dollar is soft on the yen cross, but stronger against the euro. Gold unched to start the day. WTI crude up 80 basis points. And we have to ask the question here, was that a false breakout? Right, we were watching the level, breaks, holds above for a couple days, closes back below. The dynamic is certainly there. It could potentially be a false breakout. We're going to want to watch now. We've been saying all week in our notes, if you read our notes, to be selective on the long side, to manage risk. Right, we talked about the divergences. Right, we still think the path of least resistance is up. Right, so your time frame matters. From a trend perspective, off the March lows, the trend is up and the highs are in play. If support holds, support is down here, 3,000 to 3,100. Remains the same. The song remains the same. 3,000 to 3,100 are support. In the near term, I wouldn't be surprised to see some pressure. And we've seen it. Potential for a false breakout is there. What do you want to see? An ideal world, SPY pulls back to 3,100. Test the 50-day moving average, which is rising. Right? The growth stocks settle out relative to value, right? This rotation that we were talking about, that we've been talking about for the past 2 weeks, runs its course, and then you reevaluate and look for where you want to be aggressive. That's the ideal situation right now. We remain overbought on the SPY, IWM overbought as well. What's interesting is the Qs are working towards an oversold level based on our work. Chaikin money flow is bullish, and these divergences are still in play. So we have a potential false breakout after these divergences. Let's just pay attention. Two ways to play this. The ideal way, pull back to 3,100. The alternative way, break above recent highs, and then it's a momentum trade. That's the framework. That's how I'm squaring up this market right now. Resistance 3,300 to 3,400. Market in a minute. What are we writing about today? Stocks close in the red as jobless claims move higher. Those initial claims ticked higher for the first time since April, and that tweaked some investors. At the same time, U.S.-China tensions are moving to the front burner again. I wonder. The tit for tat between the U.S. and China continues to play out. Rotation remains the theme this week. We remain selective. And we have to wonder if that was a false breakout in the SPY. We touched on the S&P there just a moment ago. Futures do point to a lower open here today. From a power bar perspective, not a ton of change, really. The Dow lost 1.25% yesterday, 9-4 bulls to bears there. S&P 500 down 1.2%, 156 to 72 bulls to bears on that metric. The NASDAQ, big underperformer. There's your rotation. 41 to 7 bulls to bears, however. Small caps are actually up on the day. Bonds upticked, sending yields lower. Yield on the 10-year below 60 basis points once again. According to the Chaikin Power Bar, large cap stocks and small cap stocks are bullish. The major markets are mixed. Talking about stocks, let's look at our stock of the day. I like this breakdown here in Momenta, MNTA. Now, it is a biotech, so do it in a risk-defined way if you're going to play bear. Bearish rating, weak trend as it cracks below the trend line. For you pattern folks, shoulder, head, shoulder, breaking the neckline. Money flow bearish, overbought, oversold indicator turning lower after failing to reach overbought levels. Relative strength dipping down, rating turned bearish. That looks like a pretty decent setup to me for a bearish idea. MNTA, I think you maybe want to take a look at the options, right? Take a look at how the options market is squaring up. I think it makes sense if you're looking to run a two-sided book to take a look at a name like Momenta to play for a bearish trade. I know I'll be looking at it today myself, seeing where it fits into my portfolio, if the options make sense, etc. But I think this could be an interesting one. Obviously, premium is going to be fairly jacked up. I don't know what liquidity looks like on the options. I just think it's interesting if you can structure a trade here. So take a look at MNTA as a bearish trade. Sector tracker now, moving to the major sectors over the last 5 days. There's your utilities at the top of the list. And I think it's interesting from a kind of rate of change perspective. The utility relationship to the market is kind of pointing to you should be selective here. Crossed over this week. Materials, our favorite cyclical group, number 2 on the list. Healthcare, we pointed out, holding support and starting to bounce. Staples round out the top 4. Energy, industrials, REITs are middle of the road. Fins, don't like them. I know they're working here in the near term. I don't like them. If I have to change my mind, I will. Discretionary, tech, and comms, those are your offensive groups. That's your risk on bucket under pressure here, right, as that rotation continues to play out. I think the rotation probably needs a little bit more time. I touch on this in my note today. I touch on it in a separate call that I hosted or that I recorded for our clients. The growth to value theme is still stretched to the upside. It needs a little bit more time. I've talked about it. I've highlighted where you want to be looking, right? Where you should have your eye. But we need to give it some time to play out. Speaking of our industry in focus today, software and services, very much part of that growth over value trade. XSW has outperformed the S&P by 7.5%. 50 to 10 bulls to bears, a very strong ratio when we think about future potential. It's currently ranked number 6 of 21 subsectors, right? So we just want to get timing right, or as close to right as possible. Top stocks, Benefit, BNFT, A10 Networks, and Mobile Iron, MOBL, all with very bullish shake and power gauge ratings. Right, so for a fund that to me looks like it's consolidating just below the highs. Okay, solid outperformance, bullish rating, 50 to 10 bulls to bear, strong trend. Maybe got a little ahead of itself. We need to kind of work our way through here. Right. Potential false breakout, watching it. Getting close to an overbought condition. So I think it needs time. I think that this is a great weekend. This is a great weekend to be doing work. If you can carve out some time to do some work on these growth themes and identify names so that you're ready when the situation presents itself. I don't think we're there yet. But if the situation presents itself, you want to be ready. Build your lists, do your work. Have a clue on drivers, right? What could potentially drive your stocks higher? Break it down and then be ready. This way you're not reacting. You have a game plan right off the bat. Taking a look at what's trending now. Yesterday's movers and shakers are gainers and losers. Whirlpool raised their organic growth estimate, sent the stock higher by 8%. GL earnings up 6%. Hershey earnings caught an upgrade today. That stock up 5.5 plus yesterday. No real news in EFX. EFX up 5%, bullish rating. Nothing company specific to drive trading there. HBAN, Huntington Bank shares. Bullish rating up 5% on the heels of their earnings announcement. The loser side of the board is mostly earnings related. Citrix down nearly 13% following their print. And a lot of that is expectations, right? I think a lot of these growth names have actually put up decent numbers. but the expectations were way ahead. That's why our trading earnings can be pretty difficult sometimes, because not only you have to get the print right, you have to get the guidance right, and you have to get sentiment / positioning right. It's a tough game to play. Citrix, neutral rating here, down 13%. ALLE, very bearish stock, down 8%. Align, ALGN, earnings sent that stock lower by nearly 6%. CMG, Chipotle, earnings down 5.5%. Apple, Goldman Sachs out with a cautious note yesterday. Sent the stock lower by 4.5%. So let's talk about the themes. This is what we do on Friday, and this is the big one for me, because this is your growth to value trade as far as I'm concerned. This is the economy right here, or a big part of it. Good, fearful. Copper been lagging gold, right? We've gone through this numerous times, right? We do it all the time. What I've been saying of late is that what we are seeing now reminds me a lot of 4Q19 rather. Apologies. U.S.-China trade phase 1 deal going to reinvigorate global growth. Copper outperforms gold up to the 200-day moving average, declining. Coronavirus hits, accelerates the downtrend. Draconian estimates get priced in, draconian positioning. Economic reports are not as bad as feared. Maybe we're going to start to see some growth after Corona. Copper outperforms gold up to the declining 200-day moving average. The one difference this time is it actually became overbought. So now we're going to watch. This is the big test. This is the test to my view and my thesis. My view is that copper versus gold is going to fade from here. That we've actually broken an uptrend line on the RSI, that we're not going to hold bullish regime, and that this will continue to point to slowing global growth, at which point you'll want to own the growth stocks once again. That's backed up by the fact that yields will not get off the mat. Here's the 10-year down below 0.6. That's my view. Where am I wrong? I'm wrong if this relationship snaps back to the upside, breaks the trend, continues to work higher, yields back up, then I'm wrong. And if I'm wrong, we'll rotate into the cyclicals. Will I have caught the bottom? Absolutely not. Will I position as soon as it appears apparent that the trend has changed? Yes. That's the view. I have a thesis, and I have a point that proves that I'm wrong. And I've laid out for you what that roadmap looks like. Discretionary versus staples, though, another area of the market that tells me I'm probably not wrong. This is on an equally weighted basis. Again, discretionary tried to rally, and now it's fading versus staples on an equally weighted basis to account for Amazon. Notice the uptrend of the RSI being broken. So we'll see if it can hold 50 here. But so far, what I see is a move that was extended to the downside, snaps back to the 200-day, and is now rolling over once again below broken support. That's how I see it. If this works higher, then it's kind of risk on. You'll want to own beta. You'll want to own those cyclicals. You'll want to own the materials, which we like. But then you'll want to start looking at financials. You'll want to start looking at industrials. You'll want to put the beta trade on. If I'm wrong. I don't think I am, though. Finally, the dollar broke down. $26 on UUP is the level I was watching. I've talked about it. I was positioned against it. It broke down. I'm no longer positioned against it. I'm gone. Trade didn't work out the way I thought it would. Thought we'd get a nice bounce off that $26 level and work higher. But it didn't work. It's now oversold. Maybe it's a little stretched to the downside in the near term. But I've moved on. What's interesting about this, though, is that this is a big driver of that silver and gold spike that we've seen of late. So if we do see a snapback, remember yesterday's silver chart, I said too far, too fast. If the dollar snap back, that's likely to play out. That's going to wrap us. Take us for a test drive. I hope you all have a great weekend. Be well, be safe. I'll be back with you on Monday.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.